Hello, hello. Good evening, good morning, and welcome. I am Big Cheds. This is episode 8 of this great new show we have on the wonderful Crypto Banter YouTube channel. Please hit that like, please hit that subscribe button. Trading can be complicated. And what we're going to try to do here is make it simple for you. When I started out, I had so much trouble. I made so many mistakes. I really didn't know what to do. But eventually I started to learn a few things and I started to pass on those tricks and those lessons to other people. My motto is helping new traders avoid my old mistakes. Eventually I wrote this book, Trading Wisdom, 50 Lessons Every Trader Should Know. It's been really well received by the Banter community, and I really want to thank you for that. And that's really where this show came from. So what we're going to do is we're going to dive into the show. We're going to do about a third of the show on a lesson. Today's lesson is going to be emotional mindfulness, emotional management. We're going to do some technical analysis, and then we're going to bring on a guest. We have a really great guest today, Ted Talks Macro. I'm looking forward to speaking to him. So why don't we just get this thing started? Once again, thank you for watching. I am Big Cheds. Please hit that like. Please hit that subscribe button. Definitely want to thank our sponsors. Firstly, we have Bingbon, one of my favorite trading exchanges. If you're looking for somewhere to trade, check them out. Really easy to use. Crypto, Forex, commodities, copy trading, custom leverage. It's really just easy to use it, and I think you'll like it. And there's a special bonus for the Banter community. We have those details in the video link. Just make sure when you sign up, you transfer in some Bitcoin, some Ethereum, some Tether, something to trade with, and start trading. I think you'll have a lot of fun with that. We also have another great sponsor, TrendSpider. They're just a wonderful place to do stock chart analysis if you're looking for somewhere to trade. Their layout is beautiful. If you want to jump right in, they have all the indicators. They have different patterns for you, kind of if you want to, back test and look at how things have performed over time. And we have a really nice sign-up bonus as well, I believe. So they're really taking care of our community. I would really recommend that you give TrendSpider a chance if you want, you're looking for somewhere to trade. As for me, I can be found on Twitter. I am at Big Cheds. You can find me there. It's where most of you know me. I'm putting out a lot of chart analysis. And the book, as I mentioned, is available on Amazon. Trading Wisdom. It's had great reviews. So thank you again, to the community. I really appreciate your feedback. If you're interested in a little bit more of what I do as well, I am on YouTube at Cheds Trading. Check out the playlist Trading Wisdom. I've taken this book and I'm doing one lesson at a time and really fleshing it out. I'll probably do another one next week. So feel free to check that out. And if you like my technical analysis, if you like some more long form education, check out Bitcoin Live, the best in class educational platform for crypto, where I'm a founding analyst. We'll start out today, as always, talking about the book. And by the way, with the comments, thank you. Really, really great to see all you folks. Let us know how you're doing out there and let us know what you think kind of as we go along in the program. I'll leave this up here. You can pause it and read this section. I won't sport your patience, but if you want to learn a little bit more about who I am and the book, you can go ahead and check that out. So we're doing lesson 10, emotional mindfulness. And it's such a tough topic. It could be several chapters, but really the greatest battle is us against ourselves. And sometimes the mistakes we're making, we're not even aware of why we're making them, how we're making them, and we're not aware of our emotions. Because trading can be so emotional. We have to kind of be aware of those emotions as they're happening, and that will help us be more precise, to be more methodical, and to do better with trading. So if you are reading along at home, we're going to start at page 29. Page 29, chapter 10. Now, this chapter starts out with a quote. Quote, any trade that makes you feel uncomfortable should be closed immediately. So has that happened to you? I mean, it happens to me a lot. I'm in a trade and I enter it, and I briefly feel great. And I start watching a little bit. And even if it goes a little bit against my, the way I want it to go, I get nervous. I get really nervous. I start to feel uncomfortable. That's a big sign that I have too much money in that trade. Or that's a big sign that I'm lacking the confidence in my original trade thesis, in my original trade idea. If you jump right in and you're immediately uncomfortable, that's a big red flag. You're probably chasing a top. You're probably entering, just because someone else said, hey, this is great, jump on in. you've done no research, you don't know where you're buying in terms of position in the channel, pay attention to your emotions. If you feel uncomfortable, close the trade, right? You want to feel comfortable. You want to be in control of your trades. Really important. As I say in the book, this is something that took me a while to figure out. But once I did, I realized that I had been improperly sizing my trading positions. There is no set rule for how big your position should be, or even exactly how aggressive to scale into it. Each trader must decide based on their own trading style, risk tolerance, and personal needs. In that quest to find the perfect balance, you should pay attention to your emotional mind state as you add risk. As I say in the book rather, quote, if you buy something and immediately feel uncomfortable, you probably have too much money in that play. So that's a big thing, position sizing. And one way to overcome this is to scale into your position, right? Break it up. If you say, I'm going to put $5,000 into this, all right, or I'm going to put $3,000 into it, break it up. Start with 1,000, start with 1,500, start with a partial position, and then see what happens. If you're more subtle, if you're more elegant, if you're more careful as you're entering your position, you're probably going to handle it better from an emotional standpoint. But if you just jam it all in, you're going to immediately start questioning yourself. Why did I do that? Why wasn't I more careful? You're going to make mistakes. You're going to second guess yourself. You have to pay attention to that. If you feel uncomfortable, you have too much money in, exit the position, or maybe even cut out half the position, cut it in half, right? The smaller your position is, the easier it is to manage your risk. So you kind of want to be conscious of that. You want to be thinking about that position size as how it directly relates to your own emotional feelings, right? Have you folks dealt with that? Please let us know in the comments. Please hit like, please hit subscribe. So as I say in the book, one way to alleviate this problem is to only play with money you can afford to lose. That way, when you get into these tough situations, it is easier to remain calm and minimize the damage to your bankroll, right? So, if it's money, we can't all do that. It's one thing, you hear people say that, and it'd be great if everyone was trading with money they could afford to lose, but really that's not how it goes. But if you can, that's how you should be approaching it. It should be money that you can afford to lose because it will allow you to be more precise. It will allow you to be more methodical. So think about that. It's the emotional management, is that bankroll management, and how those things are connected. Another way to stop this cycle, and it's a cycle of, kind of getting overly emotional with your trades. Another way to stop this cycle is to take a break from trading and to let things settle down for a bit. Often we become too involved with something and lose perspective and make mistakes we would not otherwise make. After some time to decompress, you will be in a much better position to re-enter the fight with your wits about you. Take a walk and shed that emotional baggage, right? You want to re-enter the fight. It's okay to step away from the fight. It's okay to step away. We're talking about crypto. We're talking about a 24/7 market, okay? You don't always have to trade because there will be another opportunity. So if you're not right, if your emotions aren't right, if you're mentally not right, step away, right? Take a break, walk away, go do something, listen to some music, take a nap, come back when you're ready, right? You have to manage yourself because it's so easy to trade, right? You can trade all the time. There are always things you can trade. It's tempting, right, to always be in a trade, but you want to make sure that you're in the right mindset, right? You want to make sure you're in the right, you feel good about yourself when you're trading. That's really important, right? Because you need to think about what you're visualizing, right? As I say in the book, trading without mindfulness is pure gambling. Quote, more times than not, what we visualize and think about tends to happen. So with that in mind, you should envision yourself doing well and succeeding in your trading life. Be your own best friend rather than your own worst enemy and give yourself a chance to do well. Negative thinking is toxic and self-fulfilling. So if you think, if you've been doing poorly and you say, I'm going to do another one, but it's probably not going to work out, you're going to find a way to screw that trade up. you have to convince yourself that you're in control. You have to convince yourself that you're going to find a way to make it work. Enter with confidence and follow through. You're going to do much better than if you're just you're expecting to lose, right away when you start. And we end this chapter with a quote. Quote, if you enter a trade thinking you are going to lose money, then chances are you will lose money. Be mindful of your mood and confidence level. If you are unable to visualize success, sit out the trade, right? If you're unable to visualize success, sit out the trade. Have you folks dealt with this thing? Do you know what I'm talking about? Is this resonating with you? Let us know in the comments. Let us know if you understand, you've gone through it, and share your experience here with us. Please hit that like, please hit that subscribe button. So that's just some tidbits there from the lesson 10 or chapter 10 of the book, Emotional Mindfulness. I'm telling you, we get in our own way all the time. I know I do. You want to be really aware of what you're doing. Make sure you're comfortable and you'll be fine. That's a great way to start. What we're going to do next is we're going to do some technical analysis. We're going to use with our great partner here, TrendSpider. We're going to talk about Bitcoin, and I want to talk a little bit about some altcoins that are making some moves right now. So where are we in Bitcoin? And a good thing to do is you want to kind of go outside in. So we'll go weekly chart, and then we'll go to daily chart, and I'll give you my sense of what I think is going on right now. Clearly, bulls are in control. We've talked about that. We've talked about many times in the show, this key level, the weekly MA50, that orange line, and MA, right? A simple moving average. Each of those 50 periods have an equal weighting, right? We're paying attention to that. And that was the low that held kind of in this consolidation range back in May and June, right? We bounced. What did we do when we bounced? We set that lower high at about 52, 53K. After that, the bulls rallied. What did they do? They set that higher low again, right there, right? With that MA50, right around 40K, right at the top of this rectangle, the 80-day rectangle. And then we bounced. And when we bounced, we broke above that key level, that lower high, and we accelerated, marched right through and broke through that all-time high. Beautiful all-time high, right? What happened after that? Well, we have what's called a high wave spinning top. It was almost a shooting star candle. And I'll show you what I mean. I'll try to pull this up for you. I have the spinning top. Here we go. Have it on my screen. It's a little bit small. So spinning tops. So we were initially going to have a shooting star candle, which is a spinning top. It's a small real candle body, right? But it has it has the upper shadow that's at least 2 times the length of that candle body. So that was let me simplify it. That was complicated. We had a long upper shadow on the weekly candle, and we were closing right at the bottom of the range. But bulls rallied in the last half of Sunday, and they closed back up here around 60, 0.7K, and we had that little bit of a lower shadow there. And this makes it more of a high wave spinning top. What is that? It's a volatility candle. So we put in a short-term kind of not like a reversal candle, but more of a pausing type of candle, a volatility candle, a high wave, right? A big range in this candle, and it was right in the context of happening right at that all-time high break, right from the top of April. So it made sense, right? We had all that buildup from the ETF anticipation. ETF hit, we bounced, we pushed through the all-time high, and now let's go to a lower time frame. And we've been consolidating. We've been consolidating here on the lower time frames. And it looks to me like we are in the process of developing a head and shoulders reversal. That's okay because the price needs to consolidate. We've talked about this in all these shows, on all of my shows so far, where the price is not just going to go straight up. You need to pause, build support, and digest the prior move. You need to shake out the short-term buyers and kind of get everything, everything has to work through the wash in order for you to continue higher. But what do we do now, right? Is it a head and shoulders? How do I play this? With a head and shoulders, you actually don't want to act until it completes, right? How would it complete? It would complete if we break this neck baseline right at 60K, right? 60K is the bottom of the neck baseline. We have the left shoulder, we have the head, and we have the right shoulder. If you think back to ADA had a head and shoulders pattern that failed. It did a similar thing where it was setting up for a head and shoulders. And then what ADA did was ADA broke that right shoulder. So the one thing with the head and shoulders, there's not just one thing, but the most important thing to look at is either it will complete or it will fail. And if it will fail, that will be a powerful buy signal, right? Bearish reversals that fail become strong buy signals. So if you're not in Bitcoin right now, you have a pretty clear plan of attack. I think you either short or take profit if it breaks below 60K, and you can buy in a break of 63.8K. That's the high of the October 21st candle. That's the high of yesterday's candle. So we have this kind of chop range in between here, between 60 and 63.8K. It's kind of a no trade chop zone. If we break above the right shoulder, that's a bullish sign that we're going to continue on to 65, probably 70K. But if we break this neck baseline, right, where are we going? Well, what you want to do is you calculate the height. You take it from the head to the neck baseline, and then you extend that down from the breakdown point. And basically the measured move or the target of a head and shoulders, if it completes, if it completes, that would take us right down to about 52.5 or 53K. And why is that important? If you look, that was the lower high from the weekly chart. That was the level that I showed you earlier, right? That was the lower high. And essentially there you would have a throwback or a bullish retest of that level. You could bounce off that level and continue higher. I think that would be a very bullish scenario for Bitcoin. I think a lot of people clearly don't want that because they just want up only. But I see potential for nice short-term washout, a consolidation, a drop back to support, and then continuing higher. And what's nice about this is I said, if the setup fails, then you can add to your long position, or you can go long if we break back up above that 63.8K level. And altcoins are doing pretty well right now. And if you look back around October 19th, October 20th, that's when Ethereum really started to break out, right? Ethereum broke its lower high. Broke its lower high there around 4K. We have this nice bullish ascending triangle type of continuation pattern, and Ethereum's pushing towards and probably going to hit, that all-time high here very shortly. You have other alts doing really well. I was looking at like Luna's been quite strong. Luna's been doing well. AVAX has been doing quite well. Right, with AVAX, we have the concept of a two-level filter, right? It's very easy to draw a diagonal line, but you don't want to execute a trade just based on a diagonal break. You want to use what's called a second level filter. So you watch for the diagonal break, and then you watch for that lower high break, that horizontal break. So it broke the diagonal, and then when we broke above really that 61, 62K level, right, you broke the high from October 15th, you broke the high from October 8th. That gave you a little more confidence. The price bounced, came back, did the retest or the throwback, and continued on. So this is a nice clean breakout chart. The point I want to make is that given the way altcoins are trading right now, it stands to reason that Bitcoin is probably going to trade a little bit lower, right? When Bitcoin tops off and consolidates, the money flows out, flows into Ethereum, it flows into altcoins with relative strength. DOT, Sol, AVAX, even GRT. This one had a nice breakout today as well. You can see how it broke above the August and September highs. These things only happen in altcoins when money flows out of Bitcoin. So it's a natural thing to pay attention to. You can really get a sense of what Bitcoin might be doing based on how altcoins are trading. So that's kind of the environment that we're in right now. I'm really interested to hear from our guest kind of what he thinks about all this stuff. I think we can kind of jump right into that. Do we have our guy Ted ready to go?
Yeah, have you got me there, Cheds?
Ted, how you doing, my friend?
Not too bad, Cheds. How are you, mate?
I'm doing great.
That's
Why
good.
don't you just say hello to our audience and kind of introduce yourself and let us know where we can find out more about you?
Yeah, for sure. So I'm Ted. I'm on Twitter at tedtalksmacro. I'm also on YouTube as well. So a few different platforms. I've got a newsletter that I write weekly, just covering, I guess, trying to cut out all of the noise that you typically see in financial markets. There's a lot of jargon that goes around, and people that are new or new to the space and new to the crypto space in particular kind of get lost in that web that is created by all of that noise that surrounds the space. So I try to really break down what's happening in traditional markets and see how that is going to flow into the crypto markets, for example, each
So
week.
that Go ahead, sorry.
Yeah. And also look at derivatives data. And so I'm very much a data-based trader and data-based kind of analyst. So I like to look at what the data is saying and overcome my own personal emotions. It's funny how you're talking about emotions, but
Yeah.
I think that data can really help with that. And that's what I like to do. And that's what I've learned over the last 8 or so years that I've been navigating financial markets.
So do I need to
Yeah.
be like, how smart do I need to be to read that newsletter? When I hear about data, I get nervous. I think I'm back in school.
Yeah.
There's a test, I'm not prepared for it.
Yeah,
How
for sure.
experienced do we have to be kind of to benefit from that newsletter?
Look, I'm not going to say that you can have, a beginner's base knowledge and, fly through the newsletter and read it perfectly fine. But I definitely try to simplify it as much as I can. So really breaking down those concepts that may seem alien at first and really put them into simple sentences and try and apply it to the chart. So everyone likes to read charts and look at the charts. But the chart tells a story, and that's what I like to really try and amplify when I'm writing about the markets and when I'm analyzing the markets. So emotions, you've got different data at play, you've got news events, all drawing those pretty candles that you see on the chart. So it's more than just looking at, for me, it's more than just drawing trend lines and drawing patterns. It's really understanding why those patterns are forming and who are the participants that are creating those patterns.
So you have a blended approach. Some people are just technical analysis. I know a lot of just good fundamental analysts. So you would kind of say that you are comfortable kind of blending both those disciplines.
Yeah, for sure. So my background is mostly in traditional markets where you've got big institutions running the game and really taking advantage of that retail liquidity and screwing everyone over essentially. So you see those Instagram groups, promoting Forex, signals and all the rest of it. So whereas in the traditional markets, big banks run the game. You've got Goldman Sachs and all those traditionally huge institutions that really run the market, and they dictate where price moves, not trend lines, not swing failure patterns, not head and shoulders patterns. It's all liquidity grabs and really trying to just screw over as many people as they can. So I think that's really where the crypto market is starting to head. Whereas previously, retail jumped on the train early and they took advantage of the lack of institutional interest, and it was an up-only market. But now you're seeing a few different patterns start to come into the space, and you're starting to see more liquidity grabs, more consolidation, and more institutional patterns that you typically see in traditional markets.
So do you think we're at the stage, we think about threats to Bitcoin, right? What are the threats to the crypto market? You think we're at the stage where there's so much institutional involvement that it's really not going to go away? We're kind of safe. We've passed that phase where it would have been stamped out. From my novice fundamental analyst kind of standpoint, that's where I think I am. What do you think about that?
Yeah, it's starting to look that way, isn't it? It wasn't until post-COVID that really DeFi started to take off, and everyone's in hunt for yield. So traditional markets aren't giving you that yield. You sit your money in a bank account, and you earn, you can't even earn a 1% yield on your investment in a savings account. So really, investors and bigger investors and your everyday kind of person is going to be looking for that yield somewhere else to keep up with inflationary pressures in particular. So naturally, I think the space is going to evolve in that aspect, and as well as the technology behind it, it's going to evolve as well. So there's a lot of things going well, and there's a lot of narratives to support the crypto space at the moment, and really one that is coming to the front of everyone's mind is Bitcoin as a store of value and overtaking gold and taking some market share from gold, which is obviously a large market. And you see Peter Schiff always shitting on Bitcoin, but
Right.
there's not really too many things to say that Bitcoin isn't going to continue to act as that store of value in the future.
I think that's a good way to put it. Do you think he's just trolling us? He wants attention because I know his son's big into Bitcoin, right? And he's the gold guy. And
Yeah,
we've seen gold underperform everything. It's
yeah,
like
for
the same
sure.
price since we were kids, basically, right?
Yeah, yeah. I think it might be a bit of a marketing ploy from Peter,
Yeah.
um, because he's going on for about a decade now, saying the same thing, and he's being very stubborn. He's obviously very, very smart person. I'm not doubting that. So I think it's definitely a marketing ploy from him at this point.
So is that a chart? Is that a Heikin-Ashi chart, or what do you have behind us? I'd love to see kind of what you want to present to the audience. And by the way, folks, hit like and subscribe, and thanks to Ted for coming us. Let's hear what you have.
Yeah, so this is an app that myself and my partner have created. So it's called Lambda Markets, and you can find that link in my Twitter bio. So essentially what it is we create an algorithm that gives you buy and sell signals based on a few different things. So technical oscillators, and also Deribit's API. So we integrate external data feeds into what you see here. So TradingView re-engineered into our own platform. We've got a license from TradingView to use their platform and play around with it ourselves. So that's a full-on platform at the moment. So you're looking at Bitcoin here on the weekly. So I like to look at Heikin-Ashi charts to get the overall gauge of where the market is, and are we trending or are we ranging? Because Heikin-Ashi typically shows that environment pretty well. So if you scroll back, FTX has got limited data, but you scroll back over the last couple of years, and you can see as simple as looking at, we've got a red candle now, the trend is about to change, or we've got a green candle and buyers are stepping into the market. So combining that with the signals that we generate, you can typically see on the higher time frames where we are in the market. So recently, Chaz, I'll just go through my quick thoughts on this weekly chart.
Yeah, I'd love to hear it.
So, end of 2020, that big inflow, we saw this run up here. So that moved higher. And towards the middle half of this year, we started to see the algorithm flip and move lower. And it wasn't until July, August that we started to see reversal again. You can see that buy signal that's played out all the way up here. And now, those arrows for a sec. So now we've got this signal forming, which indicates a bit of weakening of the swing higher, and possible, they're not as strong as what you see on the triangles. So the triangles are those genuine buy and sell signals, which you see here. So the X is just an indication that we could see some consolidation or some weakening of the swing at these levels. So what you see here, up here, took a little while for that to play out.
Yeah.
It took a little while for this one here to play out. So you could see some consolidation at these levels, but that doesn't mean that we're going to head lower. We could do something like this, and then all of a sudden a buy signal pops up, and it's next leg higher. So at the moment, it looks like we're testing this purple box, and a bit of consolidation is probably likely. And I'll go through some data that probably supports that a little bit later on if we've got time for that.
So do you think that, my premise earlier was kind of given the current altcoin market, how we're seeing a lot of these alts run. I know you're into ATOM, Cosmos, right? And that's got a nice looking chart. And Ethereum, that's a tougher climate for Bitcoin when those altcoins are running. So are you with me on that, or do you think they can all kind of accelerate together?
It's kind of like rotations, what you see in the market at the moment. So it seems like there's different protocols that rotate at different times. So you see Bitcoin, then Ethereum, and at the moment it seems to be those L1s that run next, like I think you were speaking about earlier. So Solana, Cosmos, those type of protocols are running after it. So you see that rotation from Bitcoin after a big pump into altcoins, and typically it flows from those larger caps into the smaller caps. And we haven't really seen that rotation as much over this recent pump. So Bitcoin dominance, I'll just bring the Bitcoin dominance over onto my screen.
Yeah.
So in this move up here, so this recent move higher, where we saw Bitcoin essentially outperform the whole market and altcoins move lower throughout most of the move. And we're getting that pullback now, but really you haven't seen those crazy moves that you typically see in a rotation out of Bitcoin. So yeah, I'm not sure. There was a chart that I posted a while back which showed a comparison to 2017, 2018. So let's see if I can find that.
So we've seen the rotation into kind of the stronger players, but it hasn't trickled all the way down, which really kind of would almost confirm the thesis. So I think it's definitely could still revert back, but I think we're seeing a trend in that direction, at least a little bit.
It seems that way, yeah.
Yeah.
So you can see a similar kind of environment to 2017, 2018. So this here being that Bitcoin dominance rally towards the back end of 2017, and then alt season when we saw Bitcoin dominance really fall in December and January of 2018. So
Right.
you're seeing similar now. So 2021, Bitcoin dominance rally towards the end of 2021, that we could see, that continue for a month or so, and then towards December, January, we get that real push for alt season. Then perhaps you see the market cool off a little bit.
So for some of the new people who are, people are watching who are new, how would you suggest they kind of approach the market? Are you into like dollar cost average? Do you really try to nail that perfect entry? How would you approach it? Kind of your advice for them.
Yeah, for sure. So I think it's very, very hard at current level. So the dilemma is, are you putting money into Bitcoin at the moment while we're at all-time high levels, or are you going to wait for a dip? And then just, if we continue to rally, FOMO in, which is probably not the best advice, but it's all about really drawing those levels on your chart and being happy and understanding where those, those bigger traders or that dollar cost averaging can really work out. So all about identifying support and resistance levels. So if I bring up, say, the Bitcoin chart, I'll bring up a clean Bitcoin chart. So the way I would look at it is, so obviously we're at all-time highs. So the next level down would probably be, to me, let's bring it down to the daily chart. So identifying those areas where, you can be happily bidding. So at the moment we've moved, say, from the lows, we've moved 60% without a real trace back. So are you happy to cop a 30% move lower and then happy to buy up here and cop a 30% move lower? If so, dollar cost average in, and if we dip, keep adding. But I'd be waiting for a little bit of a dip if you are, brand new and haven't got any position at the moment. So identifying areas of support. So this box here, you can see that prior consolidation before we broke out would be a good level to start thinking about adding some Bitcoin to your portfolio. And then, if in the case we dip down to here, there's another good level. So really identifying those support zones, and it's hard to really teach that. It's more by eye. I can just look at this chart and go, yeah, that's a good zone, because we can see there's consolidation there before we broke out. And it's kind of a point of control in the market.
It's healthy too. And I think a lot of people don't understand that you need to, test those prior levels, on the way up. And the best charts, the strongest, the most long lasting ones really do that. So, I'm definitely with you, on that. So I think we're going to wrap up pretty soon. Do you want to just remind us again where we can find out about you? And talk about your newsletter, YouTube and Twitter, all that great stuff.
So you've got my newsletter. It's if you jump on my Twitter profile, so at tedtalksmacro, which is, bring that on the screen here. So at tedtalksmacro, free newsletter sent to over 3,000 investors, co-founder at app.lambda markets, which you see is this app here. And also I've got a YouTube channel, which is at TED Talks Macro as well. So on those couple of platforms, TED Talks Macro, and you should be able to find me.
That's awesome. I know the Banter family is thankful. I know I'm thankful that you joined us here today. I know we'll have you back at some point in the future.
Perfect. Thanks for having me.
Awesome, man. I wish you well, and we'll talk to you soon. All right.
Cheers, Cheds. Thanks.
Take care, brother. That was awesome. What a great guest. We're just blessed with this show. Make sure you hit like and hit subscribe. We're blessed with this audience. We get to bring on great guests. We try to make trading more simple. We try to make it easier for you. That's what we're doing. And just to remind you about our great sponsors, we'll wrap things up. Definitely check out our sponsor, Bingbon, right? One of my favorite trading exchanges, crypto, Forex, commodities, indices, custom leverage, copy trading. They're always adding new pairs. So I really love Bingbon. Easy to use, great interface. There is a trading and a sign-up bonus. Make sure you sign up, transfer in your Bitcoin, your Ethereum, your USDT, and USDT, and you have fun. And our other wonderful sponsor, TrendSpider, one of the best charting websites out there. They're also really on the edge of innovation. If they have all the regular stuff as well, all the indicators, you can do alerts, you can do lots of really cool stuff with TrendSpider. So if you're looking to get started, I definitely recommend using a charting website. Some of you don't even use them, that's fine. But if you do, check out TrendSpider. There's a great deal for the Banter family. You'll see that information in the description for the video. You can find me. I am on Twitter. I am at Big Cheds. I am proud and happy to be the host of this show, the show based on my book, Trading Wisdom, 50 Lessons Every Trader Should Know. The book's done really well. And so thank you to each and every one of you If you're interested in it, check it out on Amazon, Kindle, paperback, hardcover. And there's a free version of the book. It's on my YouTube channel. I am Cheds Trading on YouTube. Check out the playlist, Trading Wisdom, 50 Lessons Every Trader Should Know. And if you're interested in really learning how to trade, check out Bitcoin Live, where I am a founding analyst, the best in class educational platform for crypto. I'm really proud of that. But really, I loved you guys. I'm glad you guys watched this. Banter family, thank you so much. And so until next time, Big Cheds out.